CATL's production impact will be felt in stock markets, with the company's battery technology playing a crucial role in the global transition to electric vehicles. The key catalyst for this story is CATL's recent partnership with Volkswagen Group to supply batteries for its ID series of electric cars. This deal not only underscores the significance of CATL's technology, but also highlights the growing demand for EVs, which are expected to account for over 50% of global car sales by 2035, according to Bloomberg. CATL has been at the forefront of this trend, with its battery technology being used in a range of electric vehicles from major automakers. The company's partnerships have driven significant revenue growth, with Q2 2022 earnings reports showing revenues of $3.4 billion, up 54% year over year. This growth is expected to continue as more companies adopt EV technology. The production impact of Saddle's partnership with Volkswagen is also significant, with the German automaker planning to launch over a million ID series vehicles in the next 2 years alone. With each vehicle requiring multiple batteries, this deal represents a substantial increase in demand for CATL's products. In fact, Bloomberg estimates that the global EV battery market will reach $150 billion by 2025, with CATL poised to capture a significant share. However, not all scenarios are positive. A recent report from Bloomberg highlighted concerns about the environmental impact of EV battery production, with some manufacturers facing challenges related to lithium and cobalt sourcing. If these issues persist, it could lead to increased costs for manufacturers like Volkswagen and subsequently affect CATL's bottom line. Additionally, a study by the International Energy Agency found that EV battery production emits around 150 to 200 kilograms CO2 per kWh of capacity, which is significantly higher than traditional fossil fuel-based vehicles. Risks also exist in terms of supply chain disruptions. As the demand for EVs continues to rise, there is a risk that production bottlenecks may emerge, particularly if raw material prices increase significantly. For example, lithium carbonate prices have risen by over 50% in the past year alone, which could impact CATL's costs and profitability. From a technical standpoint, we see potential entry points around $110, $115 on the CATL stock charts. This level represents an area of congestion and could potentially attract buying interest. However, investors should remain cautious due to concerns about environmental impact and supply chain disruptions. Our view remains that CATL's partnerships with major automakers will drive growth in the coming years, but investors should be prepared for potential volatility related to these risks. As the global transition to electric vehicles continues to gain momentum, CATL is well positioned to benefit from this trend. Takeaway: the production impact of CATL's partnership with Volkswagen will be felt in stock markets, with potential for significant growth, but also risks related to environmental impact and supply chain disruptions.